Welcome to the Weekly Trend Trader, how to do momentum trading. What we're going to do today, we're going to look at 5 momentum stocks that have been really accelerating with heavy momentum. If you haven't already, don't forget to subscribe. If you have subscribed, thank you very much for your support to the channel. Don't forget to like also this particular video. Share it with your friends, because you may have friends who want to build a trading business or want to build a part-time income for themselves alongside what they do. And this strategy that I'm teaching you here works very well alongside that. Also, don't forget that notifications bell, because it's only by clicking that notifications bell that YouTube can alert you that we've just uploaded the latest video. And remember, the information I'm sharing with you is time critical information. So by hitting the bell, you'll never miss out on that. So we're going to look at 5 stocks. We're going to begin our view with Tesla. Now, Tesla's had this recently, just announced a 5-for-1 stock split that caused the market to absolutely rocket up, but we'll come back to that in a minute. Just have a look back at historically what's happened with Tesla and how well this strategy works. So let's go back a year. Let's look at September, and we see the market breaks through there in October, and we can see both on the RSI a breakthrough, and on the 52-week EMA, which is rising, the market breaks through. But everything sets up for us right there in November. Have a look there, 2-week, we can see that clear 2-week pullback in November. Also on the RSI, there's a rounding bottom telling us to get ready to buy this one. And on that first green bar, the first green week in December, we buy that one long. We're at about $310 a share, and we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks in a row. Then we get a doji bar. We do nothing that week. The market continues its move up. We go to $900 a share, and the following week we get a red bar where we take our profits. Absolutely fantastic trade. Look at the RSI at this time. The market's overbought. We're at the 90 level. I mean, 80 is overbought, but we've gone all the way up to 90. This is a very overbought market. And then what happens? The market collapses. It's the COVID situation, slowdown of the economy, and Tesla stocks drops all the way back to $350 a share. But then when we look at the RSI in March this year, we can see an inverse head and shoulders. The head's at the 50 level, and then we can see the left and right shoulder at about the 60 level. That gives us an opportunity to buy this one again. At that point, the market's at just under $600 a share. So we buy that one long there. And the following week, we add some more. Week after that, we get a flat doji bar. And the week after that, we get a high testing pin bar where we take our profit at $700 a share. Fantastic trade. Then the market drops back there. If we look at the RSI, we can see that V spike. The market sets up, it bounces the next week off 700 to close above $800 a share. So we buy this one again. Tesla is absolutely on fire. So we buy this one. Next week, we get a flat week. Next week, slightly higher. Low testing pin bar the week after. $900 a share green bar the week after that. Then we get a high testing pin bar at $900 a share. Following week, moves even higher, up to $1,000 a share. And then on that red bar, bouncing off that 1,000 level, we take our profits. Another lovely momentum trade. Now the markets are still absolutely on fire. Tesla as a stock is on fire. So we get another setup here. We can see the bounce there in June on the RSI. There's the V-spike bounce. We go for it again. We buy this one at $1,200 a share, and it moves to the upside. The next week, it moves to $1,500 a share. The following week, it goes all the way up to $1,800 a share. It high tests off that level and we close and take our profits at $1,500 a share. Absolutely fantastic trade. This momentum stock, Tesla, has been on fire. But what's happened in the last few weeks? Well, Tesla has pulled back from that $1,800 level, the swing high, down to a swing low of $1,400. You can see the stock built a base at $1,400 a share and moved again to retest the upside. Last week, we had a very powerful week on the news of the 5-for-1 stock split that Tesla's doing, where Tesla moved all the way from $1,450 up to $1,650. Absolutely powerful move on this announcement of the 5-for-1 stock split. However, what is happening now? Is there much more room for Tesla to move to the upside right now? Well, let's have a look at the RSI. Notice in July, we hit the 80 level and we bounced back and we had that selling as we pulled back for 3 weeks in a row. Now, look at where we are again. We're at the 80 level. 80 is overbought. Stocks sometimes can even go to 90, 95 on the overbought level, but then they will correct. So right now, Tesla's have an absolutely phenomenal run, an amazing run. However, it's close to the 80 level if we look at the RSI, and that tells me that it may go one more week, but it's going to pull back a little bit and correct so that it's not overbought. So that's Tesla. Absolutely fantastic run. Let's have a look at Apple. So Apple too has had this stock split, 4-for-1 on Apple, 5-for-1 on Tesla. So we'll come to that in a minute, but let's have a look at the stock from the time it broke out. Let's look at a year from now. So let's go back to last August. Last August there, we can see it on the chart, August 2019. If you look at the RSI, we can see a double bottom in place in August 2019. So there's the double bottom in place, August 2019. There, first week in August, have a look very carefully. There's a low testing pin bar that's bouncing off a rising 52-week moving average. That is a beautiful setup. So we buy that one long. We're in the market there at $200 a share. It moves up the next week. The week after, we get a red bar where we take our profits. However, this is a double bottom. It's a momentum trade. We've got a rising 52-week moving average. So as the market goes again at $210 a share, we buy it once more. And we get 1, 2, 3, 2 flat weeks, 4, 5, another flat week, 6, 7, 8, 9, 10 weeks of momentum. And on that first red bar, we take our profits at $260 a share. Lovely trade. Then the market pulls back a little bit. The next week it tries to move higher. The week after it puts in a low testing pin bar. Now we are at the 80 level here, but because it's a low testing pin bar, which is a bullish bar, an entry bar, a signal of a test of the lows, and there was momentum, there were buyers there that pushed the market to its high, this tells us to have another go again. So we buy this one long at $270 a share and we get 1, 2, 3, 4, 5, 6, 7 weeks in a row, then a high test in pin bar. That very next week, we take our profits. Absolutely beautiful trade. Apple has been on fire. But then we can see that the market is at the 90 level on the overbought scale on the RSI. So we know that this market's going to correct. 2 weeks later, there's our high testing pin bar, $315 a share, high testing pin bars in place. The market collapses. It's the COVID situation, and the market drops back all the way to $210 a share. The market bounces there, and if we look at the RSI in March this year, we can see, just make out there, an inverse head and shoulders. Now, that inverse head and shoulders tells us to reverse this one, buy this one long. We're through the 52-week moving average. The 52-week moving average is still rising. The stock closes above that. We're at $270 a share. We've got that inverse head and shoulders telling us to reverse this one. So we buy it long at $270 a share. Next week, we add more. Next week, more. Third week, fourth, fifth week's flat. Sixth week, we add more. Then we close our trade at $315 a share on that red candle. But the next week it sets up again. We can see this market is absolutely on fire. The 52-week moving average is still rising. We're at $330 a share and we're back in. And we get 1, 2, 3, 4, 5, 6 weeks in a row. On that 7th week at $390 a share, we take our profits. Market drops back there from $390 in a share. We drop back, it's 2-week pullback. We test the lows, it's the swing low. We hit $360 a share and it gives us another opportunity to buy this one. There's a V-spike in July on the RSI. We buy this at $420 a share and we get 1, 2, 3 weeks. Up until last week, we had that that green low testing pin bar saying that the market was still bullish and there was still momentum in this stock. Then Apple came out, as we know, with the 4-for-1 stock split. So there's been a lot of interest in Apple stock. All of these stocks have been on fire that we're considering this week. However, where is the RSI at the moment? If we look, the RSI this week we finished at the 80 level. Remember, 80 is overbought. Stocks can sometimes get to the 90 level, but they do correct a little bit down to the downside, or they consolidate and trade sideways for a period of time. Now the stock has been on fire, but we're at that overbought level. This is not a level that we'd be really looking to take out a new trade now. However, if you bought this one from $420 a share, you're in this one long, and we've had 3 weeks of good momentum. So that's Apple. So let's have a look at Amazon. So Amazon, now we're going to have a look at Amazon from that period right there back in May 2019. So if you look at May 2019, we see that the market has that V-spike bounce off the 50 level in the RSI. Also, it's bouncing off the 52-week moving average. So we're at $1,800. We've got the V-spike bounce. We're bouncing off the 52-week moving average. We've got that low testing pin bar off the 52-week moving average that's rising. We buy this one at $1,800, and the week after we add some more. So we got 2 weeks, 3 weeks, flat week, 4 weeks, 5 weeks, red bar there, and we take our profits. Lovely trade. Then market drops back and we drop all the way to August. And we notice from August 2019 all the way until the end of the year, the market's flat. Look at how the 52-week moving average flattens out and is just running through the price action candles there. There's nothing for us at that point in time. We like to see a nice clear bounce off the 52-week EMA, or a clear bounce off the 50 on the RSI. However, at the end of the year, look at January, we get it. There's a 2-week pullback from 1900 in January. There's the V-spike as we go down towards the 50. That first green bar moves up from 1800 to 2000. We buy this one at 2000 and we get 1, 2, 3 weeks, and we've got 2 high testing bars at 2200. The second of those 2 bars is red, and there we take our profits. Absolutely fantastic trade. Then it's the COVID situation. The market collapses and drops away. It goes all the way down to the low, that swing low there of 1600. Bounces off 1600. When we look at the RSI, we can see a V-spike bounce there off that 1600 level. We get an opportunity to buy this one at $2,000 a share. So we buy it long at $2,000 a share. We're clear of the 50. Here we go. We're buying it at 2,000 and we get 1, 2, 3 weeks. Red week closing at 2,300 where we take our profits. Lovely trade. Then we see in April, there's another V-spike giving us an opportunity to buy this one again. The market is absolutely on fire. We love this Amazon stock, and so do the buyers of this market. So they buy Amazon again, we buy Amazon again, the market's moving, we buy this one at $2,400, $2,400 a share, and we get 1, 2, 3, 4 weeks out of it. We get a low testing pin bar that takes our stop, and we take our profit at 2,400. Lovely trade. But if we look at that situation, it is a low testing pin bar. Low testing telling us that this is a potential bullish move coming. So the next week we get an opportunity. The market moves higher off a low testing pin bar, which we love. 2,500. We buy this one again. We're in at 2,500 a share, and we get 1, 2, 3, 4, 5, 6 weeks. On that 6th week, it's a red week, and we take our profits at 2,900 a share. Absolutely fantastic momentum trade. But what's happened in the last 4 weeks? Well, there's been a lot of volatility, but the price hasn't really gone anywhere. We've been in this range between 3,000 and 3,200 for the last 4 weeks. Let's take a look at the RSI. Let's see if that tells us what is going on here. Well, in July, we went above the 80 level. Remember, 80 level is overbought. So this market has done a fantastic run. Amazon has been an absolutely stellar stock, fantastic move, but we've hit that 80 level, which is overbought. We can see the market has pulled back from there, and we've tried to go and retest that 80 level again. And in the last 2 weeks, we've sold back from that 32.50 level. So it shows me a little sign of weakness here. This market will either consolidate and trade sideways for a period of time, which markets do when they get overbought. It may trade sideways for a number of weeks, or the market is going to pull back because we've had such a fantastic run. We're going to get heavy profit taken as the price starts to drop, and that will make the market fall back a little as subsequent people take their profits. So that's what's happened with Amazon. Absolutely stellar run, but at this moment in time, the indicator's telling us we are overbought. If you're enjoying the video so far, don't forget to subscribe to us. If you have subscribed already, thank you very much for your support of the channel. To like this particular video, I'm sharing 20 years worth of experience with you, over 20 years. And if you like that and you appreciate that, just give us that thumbs up. It really does help the channel because it helps YouTube to show the video to other people so that they can benefit from it too. Don't forget to share it with your friends because they too may want to build a trading business. They may want a part-time income. I think they call it a side hustle now. So they may want to do something where they can create some income and still work their job in the difficult times that we're experiencing at the moment with COVID. Also, drop us your comments. Tell us when you caught 2 in a row, 3 in a row, 5 in a row, 7 in a row, or even 10 weeks in a row in a momentum trade. We want to hear about it, and that's what makes us happy as people win from using this strategy. So that was Amazon, and let's move over and have a look at Nvidia. So here's Nvidia. Let's go back to a year ago. Let's look at the end of August, beginning of September. There we go. The market breaks through that 52-week moving average, which is rising. And we see there in September, the market has a 2-week pullback. We can see on the RSI, a clean bounce off the 50, which we love. We love bounce off the 50. It's a beautiful setup, and the market is breaking through the 52-week EMA, which is rising. So we buy this one end of September. We're looking at this one. We're in. It's $180 a share, and we get 1, 2, 3, 4 flat week, flat week, flat week, which we do nothing in a flat week. That's the rules. Then we get another week, $210 a share. Break higher the next week to 225, where we put in a high testing pin bar. And the next week, in that red candle, we take our profits at $210 a share. Fantastic trade. But then what happens after that? Well, we've got that low testing pin bar there. And we can see right there at the end of December, it's a low testing pin bar. And on the RSI, we can see there's a spike, a V spike reversal. So we buy this one on the next green week at $225 a share. And we get 1, 2, flat week, do nothing, 3, flat week, 4, 5. On that high testing pin bar, we take our profits as the week after the market moves to where our stops are set. So we take our profits at $250 a share. Absolutely fantastic trade. But there in January, that candle that drops back there, we can see a very clear V spike in January. So we buy this one long. We're at $255 a share. We buy it long and we get 1, 2, 3 weeks. That third week is our high testing pin bar. Our stops are at 285, which is the low of the week. And as the next week sets up, it goes through our stops and we take our profit at $285 a share. Another lovely trade. Then the market drops back off that high testing pin bar. It's the COVID situation. So the market drops all the way back to $180 a share, where we put a low test in. Look mid-March, we can see a V spike on the RSI, giving us a lovely little setup. It's almost as if the market's got a skew with head and shoulders inverse there. The right shoulder is almost coming down and touching the 50. That week that happens, we're at $255 a share. It's an opportunity to buy this market. We've got a rising 52-week moving average. We're above the 50, which is a bullish bias. So we take the opportunity and we buy this one long at $255 a share, and we get 1, 2, 3. And on that third week, that fourth week is a red candle. We take our profits at $285 a share. A lovely trade. Then we see the market goes again. Look at April. There's another V spike. This market's on fire. We've got a strong rising 52-week moving average, which tells us we're very bullish. So we buy this again at $315 a share. And we get 1, 2, 3 weeks. And then we get a low testing pin bar that goes right to our stop. And we take our profits at $345 a share. Absolutely fantastic trade. As this one moves back to where we set our stop each week, we move the stop each week, so it takes out the stop and we take our profits on that 3-week move. Fantastic trade. Then the market goes a bit sideways. You can see there that there's no real pullback. If you look at the RSI, it's flat. If we look at the candles, it's flat. There's no real pullback giving us a V spike or any clear entry point. But the market does grind higher all the way until July, where we do get a little pullback, but by then we're bouncing off the 80 level. So we're bouncing off that 80 oversold level. We pull back for a couple of weeks, and in the last 3 weeks, Nvidia has been absolutely on fire, because it went from $420 a share to where we close this week at $465 a share. However, where is that RSI? It's back at that 80 level. Remember, the 80 level is overbought. 90 is seriously overbought, and it will either correct to the downside or the market will drift sideways for several weeks. So that's where we are in Nvidia. These stocks, the last 4 stocks we've looked at, have been absolutely on fire. And it's fantastic to see the move that we've got. And we've caught some beautiful trades by following the stocks with the strongest momentum. Let's look at one more. Okay, so let's go over and look at AMD. So at my Advanced Micro Devices, AMD, let's look a year ago. There we go, end of August. Look at that multiple week pullback. So end of August into September, we got that multiple week pullback. It drops back there in September. We bounce off the 50 level. Very, very clear to see this one. We bounce off the 50 level on the RSI. On the 52-week EMA, which is rising, we bounce on that level 2 in late September. We get the setup there. There we get that low testing pin bar, and at $30 a share, we're in. And we get 1, 2, 3, 4, 5, 6, 7 weeks in a row. High testing pin bar. The next week's a red candle, and we take our profits at $40 a share. Absolutely fantastic to catch 7 weeks in a row. Then the market pulls back again, but the market, as we know from all the other stocks, is absolutely on fire. That week, after that red candle, we get a low testing pin bar at $40 a share. Low testing pin bar, rising 52-week EMA, gives us another opportunity. We buy this one long, and we get 1, 2, 3, 4, 5, 6, 7. And on that red high testing pin bar, that 8th week, we take our profits. Phenomenal trade. These markets are really bullish and have been absolutely on fire. Fantastic recovery as we see this market going from that low in September. But then the market pulls back for a couple of weeks. We get a couple of weeks more. If we look at January, we've got an opportunity there. There's a clear V spike towards the end of January. So we buy this at $50 a share, and we get 1, 2 weeks, and then a red high testing pin bar where we take our profits at $55 a share. A quick in and out, 2 weeks, and we're done. Then the market drops back. It's the COVID situation. What do we see on the RSI? At the 80 level, there's a clear double top. January, February, double top, high testing pin bar. Some would short this one. Some would just sit out and wait for it to fall back to that 52-week EMA, which it does in March. And in March, we can see a clear inverse head and shoulders. So we've got a couple things here. Clear inverse head and shoulders. Bouncing off the 52-week EMA. We get an opportunity to buy this one. It sets up. We can clearly see the pattern. We're at $50 a share. We buy this again, and we go 1, 2, 3 on that flat week there. We take our profits on that doji bar, and it's a beautiful trade as we exit at $55 a share. Then we look at the market, and it goes into a consolidation phase. If we look at from April, May, and right up to June, the market doesn't really go anywhere. It goes in a tight range between $50 and $56. And we stay in that range until we put that low testing bar down in June. If we look at June there, look at the RSI. There we are, clean bounce off the 50. There's the market putting that low test down, a little swing low, putting it down to about $47 a share. Gives us an opportunity to buy this one. So we buy this one and we get 1, 2, red candle. We take our profits at $55. However, the market puts down another leg in July. We can see that V spike. It gives us another opportunity. We get an explosive candle at 55 that moves all the way to 70 that week. And then buying that one at $70 a share, we get 1, 2, 3 weeks. And then this last week, we took our profits at $80 a share. Absolutely fantastic trade. But what's going to happen going forward? Well, all we can do is look at our levels. Look at the RSI. It's at the 80 level. 80, remember, is overbought. Every single one of these 5 momentum stocks we've looked at have all got to the 80 level, and they're all bouncing from that level. So the market is overbought. If it's either going to trade sideways for a few weeks, or from such an overbought level, we're going to reverse as we see some profit taking. So it's a very, very interesting level that we've got to. We want to watch and we want to see what happens in the next few weeks. Now, I know that I've talked about double tops, inverse head and shoulders, swing high, swing low, things that people might not be familiar with. Don't worry, here's the strategy video, just pointing them out here. As you can see, there it is, there's the strategy video. Watch that and it will give you much more information. Then, if you're new to the channel, each week as you watch me develop what I'm talking about, it will make more and more sense to you because you've watched the strategy video and you can see what I'm speaking and explaining to you. Also here, there's one that talks about trading indices, because some people like to trade the actual indices rather than individual stocks. So if you watch the other video that's here, you can learn about that one. So until next week, thanks for watching and happy trading.